Hi everyone, today I'm going to talk about a very bullish chart pattern. It's called the rounding bottom. It's a very close cousin to the cup with handle pattern, and it often leads to big moves within a few weeks. Hi, I'm Brian Neal, and I'm founder of Tradetobefree.com and InvestBefree.com, and I've been trading these patterns for a number of years now, since 2004. I've been running the Tradetobefree.com website since 2004. We're a member of the Better Business Bureau. We have an A+ rating with them, and you can check us out on their website. Today I'm going to talk about the pattern, how to identify it, a good target entry, exits, different strategies for that, and show you an example from a recent trading setup we featured in our newsletter. Okay, this example here is Neophonics Corp. And this is a semiconductor. One thing that we've noticed recently is that semiconductors and the SMH are leading the market, helping to lead the market, and that's why we chose the stock and looked at semis at the time, and we found this pattern on a weekly chart. And that's where you want to find these, on a weekly chart. Basically, the pattern is just a gradual change in slope of the downtrend. You can see here in this example that Neophonics started to downtrend here in the beginning of April, and you can see that over time this downtrend gradually turns around and starts curling the other way. That's what you want to look for, that grounding pattern, that rounding feature to the pattern. Okay, you can actually see this also over here in the end of 2015 and early 2016, where it formed the same kind of pattern where it rounded around and then started moving up the other way. Now, of course, not all stocks will do this. Sometimes they'll round around and they won't make new highs, new lows, and they'll start going lower. So you have to figure out when the stock has reached its entry point. And I'm going to show you that here on a daily chart. I'm going to go to the website, the daily alert on Tradetobefree.com. You can get a free trial to this newsletter without a credit card number for 3 weeks. So go ahead into our site and sign up for that. But we feature all kind of setups, bullish setups like this on stocks with rising estimates that are beating estimates, and also on top growth stocks. And in this case, Neophonics had both qualities. It was beating estimates with rising future expectations. It also had pretty strong growth. Not a super growth stock, not an elite growth stock, but it was a good, strong, healthy growth rate in the high teens, I believe, and was expected to grow earnings in a similar fashion in the future, and that's why it made it to our list. So here's a daily chart of Neophonics. Now, when you click on the chart on the subscription site, the most recent chart comes up. On here, I'm going to go ahead and show you where the entry points are. Okay, so on the right side of the base here, as we curl around and start moving up on the other side, when we start making higher lows and higher highs, we want to go ahead and look for a good entry point, or go ahead and enter right away. The reason for this is that in technical analysis, the definition of a change in trend is when the stock makes a higher low. Okay, it's not the higher high, but the higher low that's significant. Now, once you make the higher high, that confirms the trend to the upside. Okay, and the exact opposite holds true for downtrends. Okay, so that's why we wait for the higher low and then the confirmation with the higher high. Now, you could, as making higher lows, you could get aggressive here when the stock breaks its downtrend resistance. The downtrend resistance is created by connecting 3 highs within the downtrend here. Okay, and you could have done that and then said, okay, it broke the downtrend, made that typical pullback to the former downtrend resistance, and then started moving back up, and that's where I want to enter. You could have done that. However, we like to wait until that higher high has been made, as long as the risk reward is still justified in the trade. So in this case, it actually moved to near the $10 area to break that higher high. Actually, the higher high is right here at 975, I believe. But there was a nearby resistance here at, I think, 988 or something like that. And we waited until it went above that and hit $10. That's a great entry point right there. And then once you enter the trade, the price often goes back up to the former highs, or very close to it. So a good target, an aggressive target on this trade would be near $14, $14.50. Okay. So right now, what we're seeing is that this stock may be forming a handle to form a cup with handle pattern. We'll have to see. But another good entry point on this pattern now that we're in a new uptrend and we've got a good start, is a break above this short-term downtrend resistance up here, once it hit close to 1150. Now, the typical stop loss on this pattern is a stop just below the prior low. So in this case, you would have put a stop loss at about 870, 873, I believe it was. Okay, and you can raise that stop over time, bringing it up to the entry point and taking some of your position off once it hits congestion up in here. You know, so if it starts to go sideways like this, you can take some off there, maybe a third, maybe 20%, and then raise that stop loss to just below your entry point. And then with this good start, we expect it to go higher, so you can have a pretty aggressive stop loss and target on this trade at this point, but you definitely want to monitor it over time and see how it develops. So okay, so that's the rounding bottom pattern. It's one of the most bullish chart patterns in the market. Top traders use this. You can find these on any time frame, a weekly time frame, a monthly time frame, a 5-minute time frame. If you day trade, you want to look for this. And again, to me, it's not the higher low, but the confirmation with a higher high that I like. If you've got momentum going into that reversal at that point, that higher high, or that prior high, I should say, that you just broke, tends to act as strong support, or it should. And if it breaks much below that, then that could be a good tight stop loss. If you want to play with tight stop loss on these patterns, that can be very effective as well. And you can put a stop loss 3 to 5% below that prior high. Okay, so in this case, 3 to 5% below 975 if you want to play a tight stop loss. So, okay, that's the rounding bottom pattern. Thanks so much for listening. I just want to mention that we have a book that explains our swing trading methodology in more detail. You can get a copy of that on our website. We also have a blog that we update frequently, and again, we have that 3-week free trial. So if you want these patterns, these setups on stocks just with the rapidly improving fundamentals, the ones that have the real underlying results that can support these higher prices, then go to our site and sign up for that free trial. There's no credit card required for that. Just want to mention that. Like the video down below, subscribe to our channel to get our latest videos when released so you won't miss those, okay? And we've got some really great setups this week, so go ahead and sign up for that free trial, and I will talk to you again real soon.